so much for joining us this morning. Happy May. We're so excited to have our guest, Angie Lewis, with us this morning and have Trevor and I back here. But gosh, we've had terrible weather this week.
Yes.
Oh, yeah, and I hear tornadoes in Edgecombe County.
Yes.
3.
Oh, my gosh.
And there are more, I don't know, but be careful out there and
Yes,
watch your weather.
It does feel like a tropical depression in May.
Yes.
So hopefully this is not a introduction to what the summer's going to look like. But anyway, hope everybody's staying safe and as dry as you can this week. Like I said, we're so excited to have Angie with us. Angie is a mortgage lender with Lower Mortgage here in Rocky Mount, and she does a bang-up job. I mean, she's been doing it for so long. How long have you been doing this?
22 years.
What? 22 years. And you said you're just beside the Harris Teeter.
Yep.
So easy and convenient. Well, tell us a little bit about yourself and, you know, what makes mortgage fun and exciting or enjoyable for you.
Sure. So I was born and raised in Rocky Mount and Edgecombe County. Went away for a little while for school, and my first kind of started my career, I worked for BB&T in Winston-Salem. I moved to Richmond, Virginia, and eventually, you know, chased the boy back to Rocky Mount. So got married and started our family here, and we've just stayed local in the area. We just love Rocky Mount and all that it has to offer, small town feel, but all the conveniences to get on the highway and drive to all the places. We love to spend time at the beach. We love to be on the water fishing. We love to do anything outside. So I'm personally just very involved in my church. So that's another just one of my hobbies. I don't have time for much else. So church and work and kids and family. So
Is your family all around here then?
for the most part,
For the
my
most part,
son
okay.
actually is my assistant.
No way, that's cool.
Yes, so he's been with me for about 2 years now. So he's just kind of learning the business, and the most important thing he's learned, because he's watching the world's credit reports, is to pay your bills on time. So good lesson for him.
That's a good lesson in the
Yes.
mortgage lending business.
Well,
Sure.
I feel like, Angie, you've been part of the pulse of the housing market for decades. I mean, you have been. We've worked on so many together, and it's good to have you right down the street, because we, Foote Real Estate has an office now on Sunset. We're just kind of getting there.
No sign out yet.
No
almost.
sign out yet, but anyway, we're right down the street, and I think that's so nice, because people can come in and see and actually talk to the lender. That's so important in the whole process. It really starts with with
Right.
you.
Before it starts with the house.
Yep.
Yeah.
Definitely.
Yeah. Well, that is really cool. I was just thinking about, so my children are only 8 and 10, so they are not working in the business, but they have to work in some because their mama needs them.
That's right.
But Trevor's son is working with her and Tony, and then your son's working with you. So pretty cool. Pretty
Nice.
cool. Okay, so you had told me before we started, so I already knew the answer here, kind of what your favorite part about working with working with mortgage and a buyer is.
Sure. So, home ownership is just so important. It's important to our community, because when you have home ownership, you take pride in your community. You're more likely to stay involved in the community, to be just an informed citizen. You're probably more involved in local politics and things like that. So it's just a wonderful thing for our community in general. Personally, it is, really about building generational wealth. So for most people, owning a home is going to be one of the biggest assets that they have. So it just the pride that it gives people, that sense of accomplishment, and really just the American dream. I know that sounds cliche,
Absolutely.
but that's what it
That's
is.
No.
Yeah.
Wonderful. Yes.
Yeah. And then we were talking about there are so many different types of mortgages out there, not just conventional. But conventional is still bread and butter, is that right?
Yep. I kind of call it the vanilla, little few handful
like it.
things that you typically talk about. And I know these are words that we kind of use all the time. So, I always tell people there's no dumb question, because we use these terminology words all the time. But there are typical loans, which would be like conventional. There's an FHA loan, that's a government option. If you served in the military, you have VA benefits depending on your service and the time in the service and things like like that, and that is an excellent benefit for our veterans, and thank you for our service if you did serve. But those are kind of the typical ones that we use, and then we have a big toolbox of all kinds of other options, and we just have to have a consultation and talk about what's the best fit for you individually, because everybody doesn't fit in the little vanilla pocket all the time.
Well, what I think is so nice about your industry and lenders and you is that, you know, a buyer has the ability to talk with the lender to figure out what makes them feel the most comfortable, and then what makes them feel maybe the second most comfortable. And I say it like that because maybe FHA makes them feel the most comfortable, but the home they love does not qualify for FHA. So sometime I showed one last night that doesn't qualify for FHA, and that's what she's been thinking about, and so it's fresh on my mind. But then that's where, you know, it is, luckily she, you know, is kind of thinking like, okay, I can do conventional, and this is what that means for me financially.
Mm-hmm.
So that's what's so nice about working with someone like Angie instead of a bank, because you can then you can work with any kind of loan. And it's so nice. I think people forget that, you know, as a broker, right, as a lender broker, you can do a lot of different things that maybe a bank cannot, or a credit union.
There are lots of different programs, and I think the biggest thing is to have that consultative approach and show them the differences, because what I don't ever want to do is say, here's FHA and this is what you qualify for. I don't want to be the one making that decision. I like to show them different options and let them decide, because sometimes our plan A doesn't work, and you need to know what plan B might look like, and if plan B can work. Sometimes there is only plan A, and then we have to figure out how to work to get to a plan B.
Yeah, yeah. So, okay, this is, I am not the smartest on this topic, but Angie is, so she's going to dumb it down for me, and hopefully you can take away something with this too. So, NC Housing is a program that helps with down payment assistance. Walk me through how someone qualifies, how you help the agent figure out how to make it the right house, you know, work through the right process for the right house with the client.
So similar to that whole showing them different things, that's one of the programs I always start with, so we can figure out if it's even an option. But NC Housing offers down payment assistance. They have 2 different programs. Both of them have income limits. So the first piece of the puzzle is, how much money do you make? One of them, well, both of them, it depends on who's on the loan, who's going to have ownership in the property, if you're married. So there are different requirements that we're going to talk about and ask about, and even though a spouse might not be on the loan, they're going to provide some documentation.
Okay.
So
because they're going to live in the home.
Right, and or have ownership on the deed.
Yeah, true. Okay, okay.
So there's going to be an income limitation. That's part of the process.
Okay.
There is a credit score requirement. So this particular program requires a 640 credit score. They do have a very specific debt ratio. So their debt ratio is 45%. And when we're talking about debt ratio, we're talking about your monthly payments, like your credit cards, car payments, student loans, personal loans. We're not talking about things like insurance, cell phone bill, internet.
Okay.
So things that kind of show up on your credit report, and then the new house payment, and we're dividing all of that by your gross monthly income. So you're thinking about the money that you get in your bank account when your paycheck deposits, but that's your net after taxes, and we're going to look at gross.
Got it. Okay.
So we're talking about income, debt ratio, credit score. The main program, which is the most popular one, you get $15,000 in assistance.
Okay.
It is, I kind of tell people, I pretend like it's my money. It's not my money, but I say I'm going to give you my money, and I'm going to let you use it. There's no interest, and there's no monthly payment, so I'm letting you borrow my $15,000, but if you sell that home within a specific period of time, you owe me that money back. And some people get a little anxious about that, but I'm like, it wasn't your money to begin with. You know, I let you borrow this money. If you live there 15 years and 1 day, the money is completely forgiven.
Okay.
So there is a period of time where you don't have to pay it back. It's also forgiven 20% per year in years 11 through 15. So I know that's a lot to take in. I also try to tell people, you know, you're not specifically writing a check to me for $15,000 when you sell the house. It's going to come out of your proceeds. So you're going to have that conversation with your agent when you talk about selling it if you need to pay that off and how that's going to happen.
Does that show up on as a lien on the house? I guess just
It
like
is a
loan.
second
That's my
mortgage.
question too, Trevor.
Yes.
That's
So
how
it
they
is
check it.
It is a
we
second.
call it a
Okay.
silent second,
Okay.
but it is a lien on the property because you
Okay.
don't have to make a payment. There's no interest, but there is a lien on the property so that they would be paid back if you sell it before that 15 years.
Do you have to
Before the 15
live in the house, or like what if you what if you decide, oh, I'm
Technically-
going to rent this and buy something else? No.
Technically, it is owner occupied
Got it.
the
Okay.
entire time.
And if someone were to pass away, how does that, and it falls through their estate, you work through that process, I guess? Okay.
Probably you would end up talking to NC Housing directly because
Got it.
we are
Okay.
just kind of the facilitator.
Okay.
We don't make the rules or enforce them. So if something like that were to happen, you would probably reach out to NC Housing and they would give you advice on what you would need to do from there.
But unlike a USDA loan, which really focuses on a more rural setting rather than a kind of more urban, so I live in Edgecombe County and Trevor lives in Nashville, so both of those areas outside the city limits we talk about qualify. But does NC Housing have anything to do with where you buy?
No, it's not specific to where, other than
Okay.
different counties have different income limits.
Got it.
So
Okay,
if we're
okay.
talking today about Nash County and you happen to go look in Franklin County, you might make too much money in Nash County, but you might be under the limit in
Got it.
Wake,
Okay.
Franklin, Johnston, for example. They have a higher income limit because they have a higher cost of living.
Got it. Okay. That
I didn't
makes
know
sense.
that.
Okay. Wow. Okay. Well, you really helped because I didn't know it had to do with the gross income. I mean, and truly, you're the expert on it, so it would just be communicated to me as the agent.
And
But-
do you have to be a first-time buyer?
The 15,000 program is a first-time home buyer. So,
Okay.
and we talked briefly about this
Yeah.
outside. A first-time home buyer technically is someone who has not owned a home in the last 3 years. So you could have owned a home 10 years ago, sold it 5 years ago, and you're still considered a first-time home buyer again.
That's
Okay.
so good.
They do have another program that is not first-time home buyer, is a different loan amount. So I won't want to worry you with all those details, but there is another program that provides some assistance that's less than the 15,000, has a few different rules, but you don't have to be a first-time buyer for that one.
Okay. Okay. And then VA has no parameters on first time or second time or third
That's right.
time.
If
Yeah.
you're a veteran, and some people don't realize you can actually use your VA eligibility more than one time. So sometimes people have used their VA loan, they bought a home, and they don't realize or don't know that they can actually use that certificate of eligibility again. There might be some rules if they still own a home that has their VA entitlement. So we have to kind of do a little bit
Oh,
of digging.
okay.
But it is possible to have more than one VA loan at one time.
Wow. Okay. But it can't be for a
good.
second home. Is that right?
Not for a second home. That's
just your
right.
primary residence. Okay. And then I know we're running out of time, but I did want to reference, since bread and butter is truly conventional loan. And most of us, if you've been around, for any period of time, think of 20% down. But to do a conventional loan, that isn't necessary.
That's right. Conventional technically can be as little as 3% down if you're a first-time home buyer, or if you fall under 80% of the area median income limit. So there's two different ways to qualify for that 3% down conventional. First-time buyer or lower income limits can qualify for as little as 3% down.
And why, as your real estate agent, we look at this so closely is if you've gone on Zillow or anything like that, you've probably seen that sometimes they say cash or conventional for a home, and then other times they'll say USDA, VA, FHA, cash, conventional. And so it really can be sometimes, like I said earlier, a little limiting. So we just want to give people as many options as possible. So that's why it's helpful to understand what is allowed under a conventional loan.
And I will say, you can do as little as 5% down with no restrictions.
Okay.
So you don't have to be a first-time home buyer or be under a certain income limit, and you can get a conventional loan with as little as 5% down.
Just with private mortgage insurance.
That's
only.
right.
Okay. Okay. Very good. Oh, you're
Well,
so helpful.
I know.
Oh my goodness,
We can
so
talk
helpful.
about so much more. In
Yeah.
fact, we might have you on again because
Yeah.
you're just a wealth of knowledge.
Well, thank you so much for joining us today. I hope you stay dry as well as possible the rest of the week, and we'll look forward to seeing you in 2 weeks. Thanks so much.
Thanks.